Hello, everybody. Welcome to part 3. This is EY's violations and future undertakings. So this is going back to their Ernst & Young's $100 million settlement on June 28, 2022 with the Securities and Exchange Commission. My disclaimer and copyright notice. Presentation is for educational purposes only and is based on the administrative order published by the Securities and Exchange Commission on June 28, 2022. Nothing in this presentation constitutes legal and/or accounting advice whatsoever. The statements and opinions shared in this presentation are those of the author only and not the author's employers or other affiliated organizations, including Irvine Valley College, the South Orange County Community College District, and California State University at Fullerton. This presentation is copyright 2022 by Bennett Tchaikovsky, collectively the author. Any distribution without my express written consent is strictly prohibited. Okay, so this is going through right over here and looking at the violations that EY essentially went through and did. The last two videos, I really encourage you to watch them to get a better perspective on what we're going to be going through and doing here today. So let's go through and take a look at it. So what exactly did EY violate? Well, there's a PCAOB rule, which is the Public Company Accounting Oversight Board, Rule 3500T, which is requiring EY and associated persons to comply with ethics standards, including to maintain integrity as described in the AICPA's American Institute for Certified Public Accountants, their Code of Professional Conduct, which is really kind of the basis for most ethics statutes in most of the states, when performing any professional service in connection with the preparation or issuance of any audit report. So again, basically over here, they, their employees, by cheating on internal exams, on the PEF, they were violating these parts. And this is also, they committed an act discreditable to the profession. And then also the registered firm, because EY, if you audit a publicly traded company, if you're going to audit Facebook or Meta Platforms, if you're going to audit Tesla, you have to be registered with the PCAOB. And so in order to audit publicly traded companies, you have to be registered with them. They have certain rules you have to follow. And they also violated the Quality Control Standards 20.01, where you have to have a system of quality control for its accounting and auditing practice. And the PCAOB quality control standards also direct the firm on the professional development of its staff. Firms should have policies and procedures to provide it with a reasonable assurance that work is assigned to personnel having the degree of technical training and proficiency required in the circumstances, and that personnel participate in general and industry-specific professional education and other professional development activities that enable them to fulfill their responsibilities assigned and satisfy applicable continuing professional education requirements of regulatory agencies. So as a CPA, you have to complete 80 hours of CPE every 2 years, 20 of which have to be done at least in 1 year. The 60 can be in the other part. So as we go through and look at this, they clearly, by allowing the cheating to happen and not being proactive about stopping it, this is what happened. Okay, so the other violations is to provide reasonable assurance that the policies and procedures underlying a firm's system of quality control are suitably designed and being effectively applied. And they really didn't have anything in terms of monitoring the cheating that was happening. And then this is why the SEC found that EY failed to comply with QC 20 within the meanings of SEC's rules of practice. And so I will be including the actual administrative order. So if you are looking for those specific codes, you can check it out. Okay. So the SEC found that based on what I just described, the commission finds that the EY willfully violated PCAOB Rule 3500T. And then based on, they find that the EY engaged in conduct that provides a basis to impose remedies against the firm pursuant to the Exchange Act rules. So this is a lot. So what EY had to go through and do is, after signing this, within 120 days after entry of the order, they have to go through and evaluate the sufficiency and adequacy of its quality controls, policies, and procedures relevant to ethics and integrity, and responding to information requests, collectively their policies and procedures, to determine if they are designed and implemented in a manner that provides reasonable assurance of compliance with all professional standards, including those relating to ethics and integrity, applicable to accountants and attorneys related to the subjects below. So they have to conduct an internal review after entering in this on June 28th. The adequacy and sufficiency of their ethics and integrity training and guidance, whether their culture is supportive of ethical and compliant conduct and maintaining integrity, including strong, explicit, and visible support and commitment by the firm's management. So, is management supporting those that are coming out and saying that there's a problem? Whether the firm has designed and implemented appropriate policies and procedures relating to responding to information requests, including those related to analyzing information requests, collecting responsive information. So again, a lot of this stuff was things that they did not appear to do when the SEC had originally gone through and sent them their request. Whether EY has designed and implemented appropriate policies and deploys proper resources to comply with all professional standards. So they want EY to go through and basically going through and conduct an internal review. Then within 60 days, they have to go through and deliver to the commission a detailed written report summarizing the review and any changes that is made to their policies and procedures as a result of this whole thing happening, right? And how the policies and procedures are designed and implemented that provides reasonable assurance that it will not happen again. So again, this is their internal review. This is the first thing that they have to go through and undertake. The second one is now you're going to do an internal review, but now you're going to have to go out and hire an independent consultant to review the policy and procedure. So within 60 days after the order, you're going to have to hire someone independently that's going to be approved by the SEC to go through and make sure that, is there someone who can verify that what you're going through and doing is going to be the right way to go through and to move forward. So not only do you have to do an internal review, you're going to have to pay for and have someone do an external review. And that is not going to be cheap, okay? So right over here, and basically this policies and procedures, we call this basically independent consulting, the policies and procedures independent consultant. They have to fully cooperate with the independent consultant and provide reasonable access to information and records as they go through and request. They should have the right to review any partner, employee, agent, or consultant concerning any matter relating to the review. And the policies and procedures IC will not have access to EY's client materials or materials that reflect client confidential information. So the scope of this is really going to be the professional education, not as it relates to a client, but obviously internally is like, is EY, are they going through and do they have policies and procedures that are designed to stop the cheating shenanigans? So after the policies and procedures, but no later than 90 days after the commission receives the EY report, the independent consultant shall issue a detailed written report to EY, summarizing their work, making recommendations, and et cetera, et cetera. So again, the independent consultant will be going through and then essentially going through and basically making sure that EY is, they're going to make recommendations and then basically take that next step and possibly going through. And I'm not sure if they have to provide this to the SEC or not, but I know that they have to do it. So they're probably going to have to make something, they want them to go through and describe its review of the training and making additional recommendations. And, again, so, and then EY is going to have to adopt as soon as practical, all recommendations of the independent consultant in its report. So they can basically They can say that if there's any part that they consider to be unnecessary, unjust, or outside of the scope of the order or impractical, they don't have to go through and adopt it, but they're going to have to come through and, show them an alternative recommendation to basically achieve the same objective or purpose. So if the independent consultant recommends something, but it's going to be too crazy, they say, well, wait a second, what if we can do it this way? And they get the independent consultant to, approve it, then they can go for it. Okay. So over here, privilege, EY shall not be in, nor shall have any claim to an attorney-client relationship with the independent consultant. That is very important because it basically means that anything that's shared with the independent consultant can be later disclosed in a proceeding. And they shall not seek to invoke the attorney-client privilege or any other doctrine or privilege to prevent the independent consultant from transmitting any information, reports, or documents to the commission staff. So if the independent consultant finds stuff in its investigation and they want to report it to the SEC, there is nothing EY can do. And then this last part is the certification by the principal executive officer. And basically, after this has been done, they're going through and they're basically certifying that this has gone through and that they've implemented the policies, going through it. So now there's another independent review over here, independent review of EY's disclosure failures. An independent consultant review of EY's conduct relating to the commission staff of the June 2019 information request. They're going to designate a 3-person committee of EY senior personnel who had no involvement in the conduct relating to the 2019 enforcement request. This looks a lot like an audit committee. You're going to have 3 relatively independent individuals who are going to be going through and looking over this different information. So they're going to create the special review committee, and they will also retain an independent consultant not unacceptable to commission staff. The remedial independent consultant shall have at a minimum demonstrated expertise in conducting investigations. So they want them to go through and do their own internal investigation as to what happened. Why did they not update their response that was made on June 20th? Okay, so they have to go through and fully cooperate with this. Basically, this access shall not exclude any records so there's going to be no attorney-client privilege. And then the report of the review has to go through and go to that special committee. And they're going to have to adopt any recommendations by that independent consultant. And then the special committee review shall ensure that the firm will adopt all recommendations of the remedial independent consultant. Okay, so this is their second consultant. The first one is really kind of focused on policies and procedures. This is focused on what exactly happened. So again, the certification of the report by the principal executive officer will also have to be made for this. So the policies and procedures and the remedial IC and any other personnel necessary, this is going to be very expensive. They're going to be able to hire whoever they want to go through and basically properly discharge their duties. The independent consultant's compensation expenses shall be borne exclusively by EY. So here they've already paid $100 million to the SEC. Now they're going to be paying more money. So to ensure the independence of the independent consultants, EY shall not have the authority to terminate the independent consultants or substitute them. So once they're hired and approved by the SEC, then they're off and running, right? Or without the prior written approval of the commission staff, and shall compensate them basically at reasonable and customary rates. The independent consultants will have to go through for 2 years. They will not enter into any employment with EY. So this is something that happened with KPMG hiring members of the Public Company Accounting Oversight Board to know who is going to be getting audited. So these people have to be truly independent. So they cannot do anything. Whoever is doing this has to be truly independent. So what they also have to do is they have to inform all audit clients. So they have to go through and call up their client and say, oh, I'm going to share with you right now this administrative order that's 16 pages, and I'm going to have to basically tell you what happened. I mean, and basically what they're going to be going through and having to do in the future. So EY has 15 months to complete the work unless extended by the SEC. And then basically for ethics and integrity training, beginning within 30 days and ending no earlier than 36 months after entry of the order, all audit professionals and partners, employees who at any excuse me, who at any time prior to March 3rd, 2020 were aware of the division's enforcement request or of the response, and the employee made a tip on June that an employee made the tip shall complete a minimum of 6 hours for every 6 months of ethics and integrity training by an independent training provider, not acceptable to the commission of the staff. So they're going to have to go out and do their own ethics training. Okay, so what they're also going to have to go through and do for the calendar years 2023 through 2025, they're going to have to certify that EY is living up to these new, they're going to annually certify that they're going through and living up through these ethics requirements. And so this is something that, again, is going to be, EY is going to be having to do this for a pretty long, for a significant period of time. So, you know, again, when we look at all of this over here, they're going to they're going to do an internal investigation. They're going to have to hire 2 independent consultants, and then they also have these other remedial actions. And, you know, this is something that they're going to have to take very, very seriously. Hopefully, EY has learned its lesson. If they find something during one of these items, I would be having a direct conversation with the SEC, because if they continue to go through and hide things, which I do not think they're going to do, that may be the end. So we'll see what happens. But in any event, I want to thank you. Appreciate you liking and subscribing to the channel. Feel free to send me any kind of questions you have to 1812cpa@gmail.com. And I look forward to seeing you on the next video. Have a great day.